Alright guys, we're going to do another quick trade recap of today's price action, Thursday, October 17th. Let's get right into it. We're going to start on this daily chart, and what we saw was overnight in the London session, we actually had the ES come in and sweep out these daily highs, okay? If we look at this hourly chart, we're going to see that as these highs up here, right? The S&P came in, swept out this daily high, pretty large divergence with the NASDAQ at those daily highs. And then right at the equities open, we had this large move lower. Now, I actually wanted to at first position myself inside of this distribution lower after seeing the SMT at the all-time highs. However, as you can see, price opened up at 9:30 and just immediately sold off. Right, retraced a little bit and sold off again. Now, I did not get involved in this retracement entry to go lower inside of this 5-minute inefficiency, right? I had a draw on liquidity for sells of this swing low, right? Which also was this hourly internal range of liquidity, which we can see right here. So once price kind of aggressively sold off into this hourly internal, I was thinking that, okay, perhaps there'll be some reaccumulation back into the range, right? We created a new hourly fair value gap. We had this unmitigated hourly order block up here, right in here. So my eyes drew into potentially a long thesis back into the range. So how did I structure that long thesis? Well, what I looked for and what I waited for was for price to form some sort of divergence inside of this internal range of liquidity. So if we pull up a ES chart here, we should be able to see exactly where that happens. So we're trying to frame an idea back into the range, right? And what we can see is that eventually, both ES and NASDAQ, again, here's this 1 hour imbalance. I'm going to show it to you on the ES as well down here. Right? Eventually, both ES and NASDAQ come into this imbalance. And then right at around 11 o'clock at the new hourly open between the 10:50, right here, and 11:10 macro, right there, right, you can see price actually ends up forming this key level divergence in the market where the ES makes a lower low with the previous hourly low, right? And the NASDAQ makes a higher low with this previous hourly low. So once we have that divergence form, that's when I look to engage the market long. So this SMT, right? And then I had these equal highs up here in the form of buy side liquidity, right? Also, this was that hourly fair value gap that we talked about, the internal range of liquidity, which we wanted to see price trade back into. So if we go back to our hourly chart, you're going to be able to see that, right? Those equal highs is the low of this sell side imbalance, buy side inefficiency, okay? So let's hop down to a lower time frame and see how I actually structured that trade. So my primary target was here. I also employed a standard deviation of this price leg, right? And I wanted to see price trade into that order block as well because it matched up exactly with that second standard deviation, right? So if I turn on the price levels, you're going to see 2518.25 and the hourly order block is 2517.75, almost exactly the same level, right? That's a nice confluence for where price could draw into. So I was looking for these levels as a external range low back into the range. So this is my H1 SIBI low plus equal highs, right? And we can see we have our equal highs. Let me just use the bar replay function. Right, we have our equal highs right in here, as well as that 1 hour fair value gap. So what I did was I looked for, as always, a change in state of delivery of the consecutive series of down close candles that form SMT. So as we can see, we have this 1 minute change in state of delivery right here. I actually ended up using this change in state of delivery right here. And as price came through this candle, I marketed long, the open of the next candle, right? Targets at the high, runners at that order block, stop loss below the SMT low. Now, if we also want to look into this a bit more, we can say that this was an hourly internal range of liquidity, so we can expect some sort of 5-minute realignment of order flow as well. And as you can see, in before we get this change in state of delivery right here, and we trade into this hourly CISD low, we have a very nice inefficiency of market price right here. This is a 5-minute fair value gap. This could also be your entry, right? Again, we're looking for short-term SMT within these arrays to qualify an entry. So down here we have the SMT and then the change in state of delivery. Now in this 5-minute gap, we're going to want to see something similar, right? We're going to want to see SMT in here, right, to qualify reaccumulation of order flow, and that's exactly what you can see we get. So we see this divergence right here inside the gap, a nice 5-minute fair value gap, a reaccumulation, and then price expands higher. I added to my position. If you were on the stream today, you would know I added to this position right inside of this natural support level or inversion fair value gap. So we had a 5-minute busy. Right, we had our M1 IFVG or support natural, whatever you want to call it. And then, of course, price eventually delivered into these equal highs, right, which was our H1 CISD low, before expanding up into that order block, right, and eventually reversing into the PM session. So that was a quick trade breakdown. Pretty simple, right? We had 3 ingredients as always. We had 1, our higher time frame array. In this case, it was our H1 BISI. We paired that with a intermediate time frame or lower time frame in this case. SMT plus change in state of delivery, and then the entry function could have been your fair value gap. It could have been your CISD on the M1, whatever, right? 5-minute fair value gap, M1 CISD, inversion fair value gap. Price reaccumulated twice before eventually expanding into this draw right here. So if this is going to be the original consolidation of our market maker model on the 1-minute, we're going to have our smart money reversal down here. Right, smart money reversal. First phase of reaccumulation, second phase of reaccumulation in here, and then price expands not only into that H1 CISD low, but also into that second standard deviation and this hourly order block. So all in all, a pretty clean trade. Nice opportunity. We got the look in on the stream today. And yeah, if you have any questions, let me know in the comments below, and I'll try and answer them. Thanks.